wealth comes from the old English word weal, which meant well-being. So I think that whether you are a generational wealth family or even an individual just taking care of yourself or your own nuclear family, my definition is that it is the ability to provide for yourself and your family in the way that you want to, within the different metrics that one would use in terms of happiness, well-being, ideally actualization or self-actualization of the individuals.
Okay, welcome to the Rabasha Family Podcast. I have a very, very special guest in the building. I have the one and only John McDonald. Now, he's the co-founder and director of Wolf McDonald Wealth Management, Wolf McDonald Private Office, and AWM Associates, which together form a cohesive family wealth network. He's had over 25 years of experience working with families across jurisdictions and generations to help them navigate complex decisions around wealth, governance, and legacy. Wolf McDonald Wealth Management, you guys have had a regulated financial advisory firm licensed by the Capital Markets Authority of Kenya. And to see the way you've been able to hold a vision to continue to serve and to go and to lead within this powerful economic is quite powerful. With these entities, offer coordinated advice across legal, financial, and governance domains. Your work is informed by Wealth Point Zero. And so, yeah, it's a really pleasure to have you here. And one thing that we noticed here with your vision, with who you are, is that your work is grounded in structure and clarity with that long-term stewardship. When we had a conversation, you talked about protecting family wealth, and you believe in integrated thinking across financial, governance, and emotional dimensions that lead to better outcomes. And the way you've been committed to raising your standards in emerging markets and helping families, ultimately your clients, build legacies that are resilient and value aligned. So thank you so much for coming on the show.
Thanks, Ajira. Good to be here.
No worries at all. So we talked to Richard, amazing at Wolf McDonald. So it's amazing now to get your side. So we can just quickly go off a little bit about who you are. Can you tell us a little bit about your background and how you got started in this?
Marketing is all about storytelling. Dad, when we first started this business, what did you say to me?
I said, yes, we do a podcast.
Why?
Because I want to tell our story.
Why?
Because I know the story builds a legacy.
Builds a legacy. And that is exactly what we do here at ETS Rabasha Media. We market your story on social media so you could build a legacy for those who come after you, to build your business and your personal brand.
Yeah, follow us on our platform. Go on our website, etsrabashamedia.com.
This is about legacy, and it is about showing up on social media every single day, because if you don't show up, your competition will.
So I'm from an area in the northwest of England near to Liverpool originally. I relocated to the Far East in the late 1990s and entered the financial services industry as an independent financial advisor. I practiced in that region for 4.5, 5 years before moving to East Africa in the early noughties, so early 2003. So have quite long experience in Africa and Asia all of my career, with the vast majority of that being in East Africa and Kenya more specifically.
And why specifically Kenya? I think that's very unique, with all the family offices that we've been speaking to, to be able to, for me, is quite proud also to be able to speak to someone who, you guys have the company in Kenya. Why Kenya?
Well, I think when I left the Far East after spending so much time in my early to mid 20s in Asian megalopolises, from a intrepid perspective, it was a different way of life, quite a tonic to that sort of lifestyle. So Kenya today is a very different lifestyle experience, or certainly Nairobi, a very different lifestyle experience than what it was in the early noughties. An exciting city now by any global standard, culturally and economically. But back then, still quite sleepy, not that dissimilar to what it would have been 30 years prior, whereas now we're obviously living in a very different global city today. In terms of the practice and why we practice here, there isn't a great deal of access to high quality advice for affluent families or individuals for that matter. Standards have been quite hit and miss, I think, for the experience that many wealth owners will have in terms of advice. Very product led, can be anywhere between an outright scam to something mediocre. So our objective, as you will have sensed from discussion with Richard, is to bring real bona fide world-class standards to our clients here in Kenya, and hopefully influence how other people practice here and the standards that people who are not our clients might expect from their advisors. So from a personal perspective, Kenya is a big part of my life. Obviously, I've spent approaching half of my life working here. My eldest son was born here. I have, with Richard, a foundation here where we have social obligations with the John McDonald Foundation, as well as other interests in the contemporary art scene here. So I'm a collector of East African contemporary art, as is our practice. So you've been into our offices and seen a reasonable sized collection of some of the region's leading contemporary artists, and obviously socially, plenty of connections there as well. And I enjoy the way of life. I think that Kenya is a love or hate it place, and majority of people love it.
Yeah, and it's quite powerful when, we now go into your imagination and obviously being in Kenya and setting it up. So I'd just like to ask you, as a simple question, what does a family office do? If you were to tell me, if I'm an 11-year-old and you can explain to me, okay, John, fantastic, all this mumbo jumbo we've been talking and such an amazing intro, what does a family office do? What does that mean? And what is your job for the family office?
Well, there's a famous quote within the industry that if you've seen one family office, you've seen one family office. But fundamentally, it is a central coordinating or integrating entity, either an individual or a group of individuals or a system that brings together multiple moving parts that relate to a family and their enterprise, their commercial assets and other assets that they own, and how that is orchestrated in a system which is integrated for a better outcome.
And what does a better outcome look like?
What we say with wealth, I've not researched this myself, but I have been told that the word wealth comes from the Old English word weal, which meant well-being. So I think that whether you are a generational wealth family or even an individual just taking care of yourself or your own nuclear family, my definition is that it is the ability to provide for yourself and your family in the way that you want to, within the different metrics that one would use in terms of happiness, well-being, daily actualization or self-actualization of the individuals. So one of the things that I think about is I have two sons who are age 11 and 13, and I've had a couple of conversations recently just regarding schools. So this is kind of an example really in terms of what I'm talking about. So our priority wasn't to be education maniacs as parents. It was about raising well-adjusted, well-rounded, competent and content individuals, as opposed to focusing simply on the grades or performance.
And can you talk a little bit about that? Like, I think that's quite powerful. So now you being within the family office, can you talk about this concept of protecting family wealth? What comes with that and what do you need to protect?
Sure. So our approach to helping families to protect wealth is through developing a system. So any entity through time tends to come into a situation of entropy. So things gradually fragmenting, facing challenges of complexity. So our view is the way to tackle that is to have a system of how you manage all of the related considerations within that family and their assets and goals and objectives for the future in a way which avoids leakage, misalignment, and so on, these precursors for things going wrong. So whilst a family can potentially lose their economic status relatively quickly, it tends to be, from my observation and understanding, more of a gradual erosion through multiple things not moving in the right direction, not being managed in the right way. And when they happen simultaneously, then decline can be fairly rapid and often much more rapid than the time it took to accumulate that wealth. So our view is a system with various different elements helps us to create order and to understand what the purpose and principles of the family are going forward in the future, to develop a system of governance which concerns how the family interact, how they communicate with each other. I know you've talked to Richard about communication in the past, the well-being of the individuals within the family. On the other side would be what we call the enterprise pillar, which is how the assets that they own, commercial assets or personal assets, are managed. How does that structure operate to protect their capital? Aside from those three elements, then we would think about the actual structure and jurisdictional architecture. So where are assets held? What are the legal structures? We often think about what's the tax and legal obligations? What are the assets which are owned? And then that would inform also what sort of structure is appropriate. What's the system of governance in terms of decision making? And what are the plans for succession? There will be for sub-elements within that structure and discussion. And that obviously is something that will evolve through time as legislation changes, planning opportunities change, families evolve, potentially migrate, or some family members may migrate, acquire different types of assets, and everything's evolving all the time. So that structure will also need to reflect that evolution. Other considerations are the planning and investment governance. So thinking about policies within a family and a family office about how they, for example, a strategic asset allocation, how much of the family's capital should be in Kenya. For many families, they want more of a global footprint and exposure to global financial markets, for example. How much might be in income generating assets? Many families have multiple asset bases within their family office, so there might be financial capital in terms of managed investment, global fund. Secondly, the commercial real estate that they own. Thirdly, their residential real estate, so potentially a home or multiple homes in Nairobi. Many families may have a country home up country or at the coast, maybe some private investments into some speculative startups and VC and whatnot. And that's quite an active scene here in Nairobi, people making those kind of bets. So we would typically develop a strategic asset allocation footprint that maps the different types of assets, ensures that we keep some sort of shape and order. We understand what income is coming from them that you can potentially rely on or assume is coming. And we can make certain projections around the growth of each asset type and map that across to the goals and objectives of the family and what their needs are in terms of cash flow and specific financial goals for the future to sustain wealth across generations. So that's quite important as well in terms of having some sort of clarity and in that respect of what are their goals, where are they going, and what do their assets look like, and is that a optimal plan to get them from where they are to where they need to be in the future and ensure that cash flow is always there to sustain the lifestyle that they feel is important to them. Another area that we believe is quite important is monitoring and reporting. So having real clarity on, well, what do the family own? And it's sometimes it never ceases to surprise me that quite often when I speak to new client families, they don't necessarily have a clear idea of what they own, what it's worth, how it's owned, how it's performing. And so we will develop either a light touch or a deep, depending on their needs, some sort of cadence around reporting, what's being reported, who's reporting it, how is it being benchmarked internally and externally, and who's it being reported to. So some sort of RACI matrix that helps to create some order and accountability amongst the family members and other related parties, whether they're managing their businesses or, in our case, managing the financial assets and so on. So that would be one other area. So that's what we would describe as a system. There's obviously quite a lot more to developing a system than that, but it gives you an idea of the type of things that we're starting to think about to discuss Align Family with that vision and what we're doing, and then document that in a living charter that would evolve through time. As I mentioned, as the family changes, there's kind of an operating model of how they do things, how things are held, what the objectives are, where they're aligned, who's reporting to who, how they are thinking about nurturing the next generation and creating, hopefully, responsible stewards of family wealth in the future.
And to be honest, I was just excited because you had said so much. I just was like, whoa, like, I definitely wanted to come in there. I think that was quite powerful in the understanding of exactly, what a family office is, what are the prime objectives. So that's what I wanted to come and ask you then. But when what you said was powerful, I'm thinking, okay, what about the multiplication of wealth? Who is the one who decides on what to invest in, right? So you get this family, like you said, you have your allocations. Okay, are you guys the one who now deals come to you and then you're looking at them? Do you guys bring the deals to the family? Do the families come and is there a chief investment? How does that work when now it comes to maybe acquiring a business or, investing in business, angel investor, or let's say property? How does that work with, let's say, Wolf McDonald?
Well, with every client family is different. So there isn't a way that it works. So in some relationships, we will be an advisor to a family office, helping them to develop this system that I've talked about, advising on some of the structures and how they fit together, liaising with other advisors, family business consultants, legal counsel, tax advisors, trustees. We tend to take the lead and responsibility to activate any sort of global financial management in terms of investment management portfolios. How are they structured to fit in with that ownership system, how they manage? So we lead on that. That's a core competency within our practice. On the enterprise side, many of the client families that we work with haven't created wealth by accident. There'll be a culture of entrepreneurialism. What we're bringing is a approach that then builds around that entrepreneurialism and the operating business and the investments that they've made to bring better governance, more focus, more broader mindset of developing this system. So it'll be fairly common that there'll be specific family members and maybe an executive team on the board of the operating companies. We're not necessarily involved in that unless we are acting as the trustee of a registered family trust that holds the share in that enterprise, in which case we may be responsible to show up for board meetings and so on. But we're not operating people's businesses. We don't get involved in private equity plays unless it's through a regulated environment. So let's say through a manager in London and some sort of liquid approach to exposure to private equity there. If clients want to make venture capital investments, then we will have developed a pool of capital within the asset allocation model which is available, and there'll be one or more individuals within that family who are responsible and accountable to manage that and then to report into the family office on a periodic basis, depending on what sort of reporting cadence that we've set out in the charter. From our side, we report through an online dashboard, which is an investor portal that client family members can log into, get full 360-degree view of the value of their assets, and in terms of what we manage, the investment management, they can drill down into fairly detailed specifics around what's within the portfolio, how's it performing, and so on and so forth. We send out quite detailed monthly portfolio progress reports that give an X-ray in terms of what's being invested in, what does the portfolio look like, how has it performed, what's the chief investment officer's commentary for that month, quarterly valuation statements, and then an annual thorough review of the whole system that I've described.
So like who brings the investments forward to them? So let's say for example, you're in Kenya, but let's say, say there's a business in South Africa or a business in Ghana, for example, that's doing extremely well and needs an investment, and that can, let's say it can 2x or 3x or 4x that family's wealth. Is that when they will come to you and say, okay, this is what we've got, what do you guys think about this? And then you guys do your due diligence. Can you guys sometimes, is it in your stewardship to see if you see a good deal that has a potential return, can you then take it to the family?
So that's not what we do. We would refer that to someone with deeper expertise in terms of analysing those opportunities, should we say. Our concern is how that fits within the system, the asset allocation, the financial planning. That's where we're interested, not in trying to assess the probability of success or failure of a startup in whatever sector that they're in. That's not our expertise, and we won't begin to pretend that it is. But we sometimes might be a gatekeeper, and promoters will come to us to discuss those sorts of opportunities. But that wouldn't be our core expertise, as I mentioned.
And where do you say your passion lies in?
Seeing success. So many families come to us to start to get advice when they feel pain points. So those pain points come in two forms more often than not. One would be they start to see that the economic prosperity is slowing down or failing, heading in the wrong direction. And that's on the enterprise side. On the family side, we see a misalignment of objectives, fractures within relationships. Ultimately, the whole system's failing at that point. And it might be a slow erosion, as I said, or it could be something that could potentially be catastrophic if they hit a shock and they're not in a position to be able to react, respond, work together as a family and their closest advisors and employees to be able to get through a difficult period. That's not always, but often a common scenario that people will come and speak to us when they feel that things are not right. And then once we've spent time to work through the processes that we go through, the framework that we have to help and guide the family to align themselves with the principles of good practice and the principles that we tend to see are consistent within families who succeed across many generations, all the way through the different elements that I've discussed and down to quite specific detail. Then we start to see success. Everything starts to come back together again. And ultimately, there's a sense of well-being within the enterprise, a sense of well-being with family members, the different branches of the families, generations of the family, and they're moving in the right direction. So I might not necessarily, because of the tone of how I speak, sound excited about that or passionate about that, but that's very rewarding to get that feedback and ultimately to take a very large responsibility between Richard and myself to help client families navigate. It's up to them to do the work, or most of the work, but to help them to navigate and to be there, to support them, to advise them, to guide them. So that's a very rewarding part to see that success. And then obviously on the investment management side, often when client families come to us, they'll have fairly mediocre investment management in place and financial arrangements and outdated structures, maybe opaque products and the usual story in Kenya, because whilst there are regulations and rules in place here, sadly, they're not always adhered to by promoters. So we'll do a clean up on that, which often not popular with the previous advisors or bankers and so on. But our objective is to act in the best interest of our clients. So when we've done that, we then start to see a much more acceptable risk-adjusted return or cost and see progress. And obviously, of the last 5-6 years or so that we've been through market cycle that's seen a number of shocks from the invasion of Ukraine and everything that's happened between then and now, and obviously the pandemic prior to that. It's a full, fairly robust test of our processes about how we advise clients on running money. And that's also quite rewarding, especially when we start to benchmark against previous providers, other providers, the median average amongst peer group and so on.
And you said something earlier, they suffer a little bit with investment management. What do you mean by that? What's investment management?
What is it as a topic, or what is it they're suffering with investment management?
Yeah, what is investment management like? Yeah, I would say as a topic, and then exactly that, how does that relate to what they're suffering with?
Well, our approach to investment management is a planning-led process. So we're not promoters of financial products or instruments. We don't have our own financial products or instruments. We don't hold money as a custodian. For our clients, we have a different system to doing that, where clients' capital is held in very secure, well-regulated custody, typically in one of the financial centres around the UK, the Isle of Man, Guernsey or Jersey. So that's where it'll be structured. Our core portfolios are regulated by a FCA regulated manager, our strategic partner, Morningstar Wealth. So their investment management team, Morningstar Investment Management Europe, run our portfolios on a discretionary basis exclusively for our clients. So what is their role? It's to provide a risk-adjusted set of strategies or suite of strategies in multiple currencies that we can then use to then invest our clients' capital into on a secure platform. We run those strategies, and that would be a globally diversified investment portfolio into a number of different sectors. Our DFM has what we call a discretionary fund manager, has what they call a fair value methodology. They're also a research house that many people have heard the name Morningstar from the research side of their business. So quite a methodological approach, rules-based system, as opposed to relying on talent. And that same philosophy applies in terms of how we help engineer systems within families and their family offices, that we're moving away from personality-driven approaches that perhaps would have been more appropriate for the patriarch or matriarch who created the wealth, and creating more of a systematic approach to how do we now protect that and grow that, manage that going forward through time. So that's what we mean by investment management. We're concerned with the highest levels of regulation and rules and really being sensible. So as I said, portfolios are regulated by the Financial Conduct Authority in the UK, which is one of the strongest regulatory bodies to manage people's money. Our preferred custody is a platform in Jersey, which is one of the Channel Islands, and that's regulated and supervised by the Jersey Financial Services Commission. Again, another very robust system. We only ever set up what we call segregated accounts. So there's no pooled investment vehicles. A client will own or trust that the family trust may own a account which is segregated. And in the event of the financial institution being unable to meet its liabilities, the client's capital would be secure and not appearing on that organization's balance sheet. It's a pretty robust structures there and a rules-based system in terms of investing. We use proper risk tolerance profiling to help to ensure that clients are, the way the money's being run and the volatility that may happen or will happen through time is appropriate for what their needs are in terms of A, the timeline, and B, the emotional side of investing. So it's not always, for many clients, a completely rational decision-making process. So we need to consider that. Here in Kenya, we are a capital markets authority, regulated and licensed practice. And our responsibility is to advise our clients in line with their best interests. Richard and I are both chartered members of the Chartered Institute of Securities and Investments, and we look at other best practice frameworks around the world and align how we deliver advice and services to our clients. In terms of Kenya, as I mentioned, there is rules and regulations in place and ethics for the delivery of financial advice to private clients. Unfortunately, they are not always adhered to. And many wealth owners have had bad experiences. And to give you an anecdote, one of our clients was in here recently. We run a substantial portfolio for the client family. Richard and I are both directors of a private trust company in the Channel Islands that oversees the trusts for that particular family. So we're well embedded in the family office, along with 2 what we call client directors and 3 professional directors from a fiduciary services provider there in the Channel Islands. Before they met with us, when they sold their family business, they'd made a series of errors. And the second generation used to sort of chuckle about the first generation, how many mistakes they'd made and how much money they'd lost. Fortunately, within their own operated business, they'd made a significant amount more than had ever been lost through making private investments. And then what happened was that we carved out a pool of capital for the second generation to then invest into some of the private speculative schemes that can be fashionable to talk about, to be involved with, and so on. And obviously they went away and learned their own lessons, and all of that's been lost. So the conversation that we had is the father of the gentleman who visited us had said to him, what would have happened if we'd never met John and Richard? And his genuine response was, we would be back at work. So to go from tens of millions of dollars to thinking that that probably would have all gone had they not had all the systems, controls, and conservative approach, that his guesstimate, and he can only guess at what would have happened, was that he'd probably be back at work, and so would his father, who's in his 70s, because it's easy for things to go wrong anywhere, but especially here, where the regulators can struggle with enforcement on unregulated advice and unregulated, unlicensed practices. That's another important part of protecting wealth. It's not just about the high-level system of highbrow objectives of goals and principles and practices, but just something as fundamental as regulation, which you take for granted in Australia. There's a strong regulatory body there and enforcement, but in a emerging market environment, the wealth owners don't always have that luxury.
It's quite powerful in just what you said there, how he said man would be back to work, which actually leads me to my next questions. Before I asked you about the frameworks, I spoke to Vanderbilt. So she's the 7th generation, and she was saying how, Cornelius Vanderbilt built it, all the way to 7 generations. And it's only like them and the Rockefellers. There's not many. So my question to you is, why do you think it always gets lost around the 3rd generation? What goes wrong? Is it exactly what you were just saying there? Things like if you guys didn't come in that situation, but yeah, like what goes wrong from the generations?
Yes, that's an interesting question. So, all sorts of things can go wrong, and many things can go wrong. But I'll try and talk through some of the journey that a family might be on with wealth. So a wealth creator is often a very focused, driven, and motivated individual who has a single vision. More often than not, certainly in their own mind, they're always right, and are not going to be told otherwise. And it's that single vision, focus, and motivation maybe to move the family away from poverty or move towards creating more opportunities for their family, which can be the motivating factor. The way that they make decisions can be quite ad hoc without really many rules or processes. And then a family will go to a second generation where we'll often see siblings learning to work together. There'll still perhaps be an entrepreneurial vision there to build the business and to grow the business and to grow their assets. And remember, that second generation have seen the struggle of their parents. They've been in the household growing up more often than not and seen that struggle and seen how much effort and risk has been invested in getting them to where they are today. So then when we go to the third generation, their children, they've often grown up with wealth. They haven't grown up without wealth. They haven't seen it, felt it. It's a completely abstract concept for them to not be wealthy. People are not wealthy, other people, and they haven't, they haven't experienced what that's like. So that can create a number of challenges to be navigated in terms of perhaps less responsibility around wealth can happen. I'm not saying it does, but it can happen because ideally then we're nurturing the responsible stewards of wealth from generation to generation to generation. They are often in what's called a cousin consortium. So they're not just collaborating with their sibling, like the second generation, or their spouse, like the first generation, but cousins who have grown up in different households with perhaps a different way of life within the household, perhaps different culture, is married into the family, maybe a different country. And obviously that brings, as I used the word entropy earlier on, quite a different environment. So how do we now align all those different priorities that they would have? There can be quite big age gaps as well amongst that cohort by the third generation. So what they need to do is to get organized, and this is what we specialize with, often between Gen 2 and Gen 3, to create this system of, well, how do we now operate together, and what are the rules, and who's responsible for what, who's been reported to, what's my role as a responsible wealth steward, what's my role if I'm running a business or working in enterprise or just as a family member at large. That's some of the things that can go wrong from a metaphysical perspective, and some family wealth advisors talk about this. Specifically, one I can think of is a very well-known expert within the field from the US called Jay Hughes, and talks about how energy works within metaphysics from creation to stasis to destruction. And within Hinduism, there's also three gods that reflect that same journey. And what we're talking about there comes back to the word entropy through time. So how do we tackle entropy? And that's through having a system. So we're not going to be able to continue that for eternity, but we do what we can today, and we tighten things up and get things. Richard and I are both from shipbuilding cities or towns. So we say we get things ship-shape. Everyone knows what their role is. There's a full blueprint on how everything works, who's doing what. People can step out of their roles, someone else can step in. There's a captain in charge, and so on and so forth. So if we can do that, I think we can help to navigate the complexities of managing wealth and what can happen outside of the family fairly well.
Wow. And which now leads me into a little bit of the frameworks. Can you talk about that? I know that's something that you like to talk about as well, but yeah, what are some of these powerful frameworks that you guys do that, are quite powerful in running this system?
Well, we look at different frameworks in terms of how to deliver advice. So Rich and I are both certified with the Family Firm Institute in Boston in the US as family wealth advisors and family business advisors. Before we did those certificates and got involved with the education program, obviously we had knowledge and we had experience, but the frameworks helped us to perhaps organize our thoughts more clearly. We look at other models like the Ultra High Net Worth Institute's 10 domains. We look at different governance models like the 2-pillar governance system, having a family pillar and an enterprise pillar, and the different responsibilities and accountability within that framework. And then we have our own framework that we use not as something to impose on a family, but these act as guides or beacons to help us to organize our thoughts and to compartmentalize certain aspects of or elements of the overall system so nothing's lost, just to keep a shape, I suppose, and that sort of framework. But I think it's probably important to point out that the intention is not to impose a framework on a client family and their system, but to understand how that system works and then to create that sort of translation between how they actually operate their operating model and the, let's say, legal and financial structures that we then need to map across to integrate with. So in Africa specifically, actually, this has been an interesting conversation I've had with a number of other advisors over the last few weeks, is the operating model in terms of how a African family in Kenya relates to one another doesn't necessarily map directly to a legal and financial infrastructure. So the clarity which is required within finance and law is not necessarily a natural way that a Kenyan client family will operate, where there's perhaps more fluidity in terms of relationships. And I'm sure I don't need to tell you or teach you this, I'm sure you have your own views around what the operating model is in terms of hierarchy, harmony being more of a priority than clarity, for example. So that's obviously a challenge of an advisor, to try and really understand a client and what their challenges are and how we can help them to navigate in a way which is appropriate for them, rather than coming along as a clumsy Westerner and imposing this theoretical framework on how they live and how they're going to succeed going forward.
Yeah, I can imagine the dynamics there, but it's amazing to see how you guys are able to add impact and value. And you don't have to answer this like if you don't want to, but like when it comes to like all the assets, is there numbers that you guys deal with in terms of all the families, the amount of assets under management that you guys deal with, just for the audience?
Yeah, so it's a large sum in terms of what's under our direct oversight, but that's probably only a fraction of the real value of the capital when we speak of economic capital that the client families that we advise own. So we would be directly responsible for a portion of that. So what we call the Global Wealth Fund, for example, more often than not, that's just a sleeve within a multi-asset portfolio that a client family will own, that we advise on the whole structure and how it all fits together, but we're only responsible for the financial assets themselves. And then obviously we can then start to talk about the other types of capital within the family as well. The financial capital is there to support. So Richard, I think, may have mentioned this to you when you were talking to him about how we can think about family capital in different ways, whether it be cultural capital, human capital, intellectual capital, and ideally that financial capital that is there to support those more important parts of life that make life better, our relationships and our well-being.
Yeah. I love it. And I can see the passion that you guys have. So I like to play a game. And so the game I like to usually play is I'll give you a word, and whatever comes to your mind, the first thing that comes to your mind, you say it. Yeah?
Okay, let's try. If I can think that fast.
You can take your time. CEO.
Leader.
Explain.
The role of a CEO in my interpretation, is a leader of a organization, perhaps an integrator, in the way that we talked about this integrated approach earlier. And they'll be more often than not responsible to integrate different departments and elements of an organization to create this cohesion that we've been talking about.
Love it.
And to inspire the rest of the team.
Yeah.
I guess a group of individuals who are often related to one another by birth or marriage, and often really close friends would quite often be considered to be family. And of course, I'm perhaps speaking from a Westerner's perspective, observations of spending so much time in Kenya, that can more often than not be quite a number of people, certainly with responsibility to other people and to ensure everyone's looked after. So obviously unity and harmony are some of the stronger qualities of African families, certainly here that I've observed, and priorities. And that can be quite broad to almost distant cousins, I guess we could say, that individuals may be responsible for, especially if they're a CEO.
Is it hard maybe for you, like, is it also your job to look at sometimes and say, hey, like, do you need to keep supporting this person? does that sometimes come into it, where sometimes looking at some families say, okay, well, why are you still, what are they doing? How are they bringing income? Like, do you also have that maybe hard conversations with your clients as well?
I'm not sure it's my place to do that, but what I can and do is to approach wealth as something that, well, what's the purpose of that wealth? So for the family, the two key concepts are to provide security to the family. This is the purpose of financial wealth, to provide security to the family. So what does that mean? It means shelter, ability to deal with things like healthcare and so on, maybe food security. And the other is opportunity. Opportunities to create opportunities for those family members, regardless of whether it's son or distant cousin, so they can create a degree of independence themselves as opposed to being dependent completely. I mean, that's the ideal scenario. Of course, it can take time for that culture to really work within a family. But I don't see that dependence is a way for that individual to really be self-actualized and content within their own life. That's just my own personal view. So I guess that this would be a friendly conversation that we would have with wealth owners around, have they thought about how they can perhaps help other family members who are reliant on them to become more self-reliant. But I wouldn't say cut them off or out, no.
Okay. Legacy.
Meaning beyond one's lifetime. So to expand on that, one of the questions that I will often ask family members within a generation or family is what their legacy will be. To ask them if they've thought about what their legacy might be within the family or outside. I think part of the legacy that for our practice and what Richard and I do here is to leave client families who've trusted us in better condition than we found them, to leave our industry in better shape than we found it, to leave our practice in better shape than it is today. And there's other things as well. So as I mentioned earlier on, we have a small foundation that part of our revenue goes to automatically, regularly, monthly or quarterly, whatever it is. And we're focused towards leaving a legacy with that foundation through providing opportunities to disadvantaged youth through education, arts and sports programs. We'll sometimes invite clients to stand alongside us financially or participate in different schemes and initiatives that we're contributing towards. So that's also a part of the legacy that we want to be able to leave from our work. So meaning beyond one's life, what imprint have you left in the world?
Today I was which reminds me, and I think we're kind of missing that in society today in terms of, even children or us knowing family history. I was talking to Vanderbilt, and she was saying I was in New York and I'm looking at what my I'm looking at his creation, kind of the revolution industry. So it's a lot of children today forget, the family history and the legacy and things like this. What we're doing right now is something that our children will see these interviews. And that's why this personal branding is so valuable now, because it's exactly what you just said. That's the definition of legacy. Of 7, 10 descendants down the line, we have this history. This is what we did. This, so you're always looking to better that. So I think you summed it up perfectly.
Yeah, so that's a family legacy, isn't it? I think I was probably talking more about individual legacy. One of the things I would say to you is, I talked about our framework and system earlier on, and I'm not here to promote that, but I will tell you this part, that at the center of those elements, put the family. So if I was to sketch that out on a piece of paper or a board or whatever, the family are at the center, and we put the other things around there. So what do we mean by the family? So who are they? Where are they from? What's their history? What's their culture? What are their values? And their philosophy of wealth? That's always at the center of everything. And we'll encourage client families to document that as the first part of any sort of family charter or constitution or whatever terminology you prefer to use. The family are right at the start of that, their history and their culture and their values.
I love it. The last one I'll give you, fatherhood.
Responsibility.
You want to elaborate on that?
I think there's not a great deal more responsible than to be charged with the raising other people to teach them what you've learned. And hopefully my personal objective is they can stand on my shoulders to get higher within their own lives. Yeah, so I think you have a close relationship with your father. I've seen that. So that's something that I would hope to be able to emulate, that we're still good friends, myself and my sons, when they're adults like yourself, and still be able to have fun together and have shared values and interests and shared objectives. Yeah, so it's a big responsibility, and I probably don't need to talk about the economic responsibility that comes with that. I think probably most listeners would probably have a good handle on that.
Exactly. I actually give you one more because I like this one. Money.
Currency.
Oh, okay. Currency. I don't think I've heard that one before.
Yeah, money is a currency that you use to move between one thing and another, to barter your time, your resources, your assets with another service or product or time.
Love it. All right, John, I thank you so much for coming on today, sharing. I see potential in more. I know someone who has a family office in America. I think it would be awesome to have you guys on his show as well that we're collaborating with. I think it's powerful, like, to talk about these things and to talk about the industry and just your experience. And, you know, again, like kind of meeting you guys in Kenya was quite powerful. And I'm looking forward to seeing, you know, what the future holds. So thank you.
Yeah, thanks, Ajira. So it's been good to talk it through with you, and I look forward to other opportunities to talk about the topic.
Cool. All right. Thank you very much. And we'll see you on the other side.
Hey, what's wrong? Bro, I'm stressed out. I'm running my business. I've got to serve my customers, but I need more customers coming in. I can't keep relying on word of mouth. Why don't you just use ETS Rabasha Media? Who? Well, with AI now, what they do is they go in, get your perfect clients, bring them in front of you. So all I got to do is run my business and he brings me opportunities. Think about it. You speak to 3,000 of your ideal customers, convert 1% of that 3,000, that's 30 people. 30 people in a room with you, can you convert that? Of course I'll close them. I'm good at what I do. I just don't have time to be going and looking for my perfect client. Focus on what you love doing and let them bring you customers. When you win, they win, commission, cha-ching. Sujira Rabasha, huh? Yeah, Sujira Rabasha. Go and Google them, man. Come on, take it to the bank.
If you really enjoyed this video, make sure to click here, and I'm sure you're going to love that one.